Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Saturday, September the 29th, 2012, and here is today's weekend review. Well, guys, I hope you guys are enjoying your weekend so far. I have a great video that I'm going to put here together for you guys. So grab your popcorn, grab your drinks. It will be an extended video, of course, as our weekend reviews are pretty much the longer videos, but it will have you prepared for next week's trading, and we'll look at different scenarios that could take place so that when, depending on what scenario takes place, we will be proactive and not reactive on our decision making. So in any case here, let's go ahead and take a look at the indices to see how they closed on a percentage basis for the week here. The NASDAQ was down 1.41%. The Russell was down 1.68%. The Dow Jones was down 0.9%. The S&P 500 was down 1.11%. The oil index was down 1.48%. The Dow Transportation Index was down 1.37%. The banking index via the BKX was down 1.67%. Gold was up 0.49%. Silver SLV was up 1.67%. And crude oil was pretty much flat this week via the USO was up 0.09%. So pretty much a down move in the market this week. We did have some buying coming in, yesterday. I believe on Thursday we got a bounce or so. I can't remember off the top of my head. We'll take a look at the chart here shortly. But in any case, pretty much we had a down week this week. We caught that. We caught the downside action pretty well as we were short Apple earlier in the week, covered that. We were short the 675 weekly puts, made some decent money on those. I'm talking about over a 300% return. Some people even got 800% return on those puts that we called out. So good stuff, guys. So before I go over the video, if you guys have not been to the website yet, please go to wallstreettrading.com. Check out the website. Check out our My Wall Street TV tab in the upper right-hand side where you can see the videos that we do on an intraday basis and after the market closes. And obviously, this is our weekend edition, our weekend review. And if you would like access to the chat room, go to mywallstreettv.com. Type in the password SMART, and you'll have access to the chat room. If you're located in the South Florida area, we have a meetup group called Wall Street Trading Network South Florida. We just had our first meetup on Tuesday at Nova Southeastern University. Went pretty well. And if you guys are in the area in South Florida, that would be something you guys want to check out. So in any case, let's go ahead and jump into the analysis here. All right, I want to first start by taking a look at the SPX. All right, last week was, yesterday, Friday was the end of the quarter, so we are now starting the fourth quarter come next week. So I want to show you guys the interesting charts via the quarterly view, which I usually show at the end of every quarter. So first, let's start off with that. And here we go. Okay, what you're looking at right now is a chart of the S&P via the S&P 500 index, 20 years quarterly chart, meaning that every candlestick is 3 months based on a quarter. All right, and the way I analyze this chart is obviously if the chart's breaking out, the way I kind of put the psychology together on this chart here is that, okay, if the chart's breaking out of the past 2 quarters, and it broke out this quarter, the third quarter, that means I'm expecting that people would say, okay, the charts broke out a quarter, we got to confirm close above the previous highs of the past 2 quarters. People are probably expecting earnings to be better going forward for the next quarters, because we broke out this quarter. So that's kind of how I use psychology. Either way, you can look at the chart here. This is the quarterly chart. Like I said, you can see we broke past the prior 2 quarters here, and we're closing out on a nice little candle here on a quarterly basis, if I haven't said that enough. All right, so that's looking pretty good, especially if you're a bull. Okay, now if we take a look at the S&P monthly chart via the SPX, you can see here we are closing above 1400. We closed above 1400 last month. We got an even better close above 1400 this month. Okay, and right now the next resistance level we're working off of still is this month's highs. All right, around 1474.51 on the S&P 500. But as long as we can hold above 1400, All right, consolidate a bit. You got to expect this to continue floating higher as the trend is definitely to the top side, and we're in this little upward channel. If you take a look at the weekly chart here, again, holding above 1400, even 1425 for the short-term traders that are using that as a reference level. 1425 is a good level to watch. Still looking pretty good. Still holding the rising 8 EMA, 8 SMA on the weekly time frame, above the 50, above the 20, above the 200, so looking pretty good there. All right, but the next thing we want to bring to your attention on the daily chart of the S&P is this little upward channel that we have in play, okay? As you guys know, these upward channels usually resolve to the downside, kind of like they did right here back in May, all right? And then since we've been in this little uptrend channel since June, we've been using this as a roadmap, okay? And really until we break below that little downward channel band down there, which is around 1420, which also lines up with the prior resistance right here. So that means that's going to be support. So this is actually a double support area around the 1420. Unless we break below that, guys, I wouldn't really be bearish on the market. It's more neutral to bullish, but definitely taking opportunities to scalp money to the downside when some of these stocks that have been overbought pull in, like Apple and like some other stocks out there. Okay, so levels to watch in the S&P. All right, of course, via the index, 1429, 1420. 1420, I believe, will be a nice buying opportunity, and we'll see how that goes. So now let's take a look at the SPY. All right, and I'm just going to look at the SPY on the monthly as well. You see SPY on the monthly as well, looking pretty good. Here, levels to watch in the SPY is a 148.11, which is this month's highs. On the weekly time frame, you can see we could pull back. We could pull back down towards 140 on the SPY, but at the same time, we do have some support around here on this 142 area. Taking a look at the weekly time frame. Taking a look at the daily time frame. As long as we can hold above this prior resistance, now support on this side, 142.58, we should be in good shape. If we do get some selling pressure, we do have a gap that's all the way down here around 141.75 and 141, as that is a gap window down in that area. You can see it from right here. All right, so who knows? The market may want to pull in and fill that gap. We'll see. Either way, 142.58. Want to see how price reacts around there. If we reverse back to the upside, you want to be watching Thursday's highs around 145 as resistance and then 146. All right, now taking a look at the ES, which is what I use a lot to to trade intraday here. You can see here showing back some of my channel analysis. We highlighted the fact that we were in this little upward channel last week, and if we seen any change in characteristic, because the same choppy channel we had right here when we broke out, okay, which we call this to the T here a couple weeks ago with the TNAs. Same way that we broke out this channel, we were expecting this, but like I said, if we saw any change in characteristics, well, we could get a nice little bull trap, all right, since we had some shaking and baking going on inside this little channel. So we got that bull trap Tuesday. A lot of stocks sold off. We caught that move, fell right back into our next support area from our prior flag that we had set up. So this little support cushion, support zone down here, and we got to bounce. All right, we got to bounce Thursday, and we try to get some bounce action on Friday after selling off pretty much for the first morning part of the session there. So going forward, remember, this is a channel, okay? Whether it's at a slight angle or not, it's a channel. So really until we get back above this trend line right here, we got to be looking at people probably trying to get short against this upper band right here. Okay, now if we break back above, I would say Thursday's highs, we have a good chance of making a move back up towards 1450, and hell, maybe even up towards 1455 or so if this is actually a dip buying opportunity. Okay, and another thing that's pretty interesting is that if we break back above this channel line, all right, right here, we start trading this little zone and we break above the top sign, we break out. That means this was a shakeout right here, and a lot of people could be trapped if that in fact happens. So different scenarios that could take place next week. We're pretty much going to be prepared for either scenario that takes place as we do a lot of market research, and you can find that research again on our website at wallstreettrading.com, or you can even check out my website since since I'm the one doing the videos and I post them on my website as well. You can check out channelguidetrader.com. So in any case, ES, we have that analysis in the ES. I mean, I could definitely just take a look at the weekly chart real quick here. You can see the uptrend is still intact. As long as we stay above 1400, like I said, we're still pretty much in good shape. All right, and that's it. I just went over the S&P 500, all the different vehicles that they have for it. So if you trade the futures, if you trade the SPX index, if you trade using the SPY, you should have all the levels there and see how we're viewing them. All right, so now let's take a look at the NASDAQ via the QQQs, triple Qs. Want to start off with a monthly chart here. You can see we got rejected at the 50% channel line from the Fibonacci's from the tech bubble sell-off. That was the reference level that we were using around 70.52. And we got to see how price action reacts. Remember, it is the key level here, being the fact that it's the 50% retracement of the big sell-off we had during the tech bubble when all the technology stocks were hot and all the other good stuff. And taking a look at the weekly chart, okay, the Qs need to hold 68. If we start holding below 68 on the Qs, we could pull back towards 66.5 or so. And then we have our daily chart, again, which is right here. Prior breakout level, let me put the studies back on the chart here. Prior breakout level was 60, were these highs right here around 68.5. So I want to see us hold above 68.5. If we don't hold above 68.5, we could definitely pull back down here towards the bottom support area around 67.41, which is about $1.10 lower on the Qs. Taking a look at the IWM. Here, let's start off with the monthly chart. Monthly chart was trying to break out this month, but got rejected. We'll see if it can happen next month. Definitely keeping an eye on the IWM. If that breaks out, that'll be another catalyst that could rocket the market up even higher. I'm going to be watching this pretty closely to see what we can do with those TNAs, or to see if it's a perfect opportunity that they're going to try to sell the market and buy the TZAs. We'll have to wait and see. All right. Weekly chart looks pretty good, just pulling back into the rising 8 EMA on the weekly of the IWM, the Russell 2000. So it's still looking pretty decent. And then we have our daily chart, okay, which definitely could pull back towards our prior breakout zone around the 82 level, which also coincides with the rising 50-day simple moving average. I believe that's the simple, could be the exponential, and that is. See, yeah, that's the exponential moving average around 82.22, which I think that'll be a perfect buying opportunity in the TNA, whether it be for a scalp or not. I definitely think buyers will step in on the first test down there around the 82. As you can see, that is prior resistance that broke out, so now it's going to be support in that area. All right, next thing I want to take a look at is the dollar futures. The dollar futures got a nice bounce on Friday, obviously causing some selling pressure in the markets and in some of these commodity stocks, a little bit of weakness across the board. But the dollar index still in this little downward channel, really until we break back above, say, 80.75, back all these moving averages right here, this little zone. That's going to act like as a double resistance from the trend line, horizontal price resistance, around 80.67 or so, 80.75. And then we still have, of course, this little downward channel that's in play. You can see how we broke below the downward channel bottom band, and then they brought it right back up in there. So we'll see, keeping a very close eye on the dollar. Okay, and then next thing I want to show you guys is the euro. Of course, I showed you guys the euro dollar analysis before we broke out in the euro, and showing you guys why I think we could break out, and that everything coincided together with the euro breaking out, the market being in that little downward channel, allowed us to capitalize on some decent trades. All right, let me take off the studies here so you guys can see what we really have going on here. And there's a lot of lines in the chart, but main thing that you got to know, that you guys should know if you guys have been watching our analysis and you guys follow our analysis, is the fact that, when we called the euro for a breakout a couple weeks ago, when we broke past our key channel level that we've been watching in my proprietary channel analysis system here, all right, so highlighted the fact that if we broke above this little band, which kept on getting rejected throughout the earlier part of the year here, we could get a nice breakout in the euro. Well, what happened? We got that nice breakout in the euro just like we expected. All right, and now we have been pulling back since that breakout. One thing that I see though in the FXE, not the euro dollar, 'cause there's no volume on this chart here, but the FXE on this pullback, it has been pulling back on low volume. So if this is prior resistance from the breakout, this should be support somewhere down this area. So we could get some selling pressure in the euro, a little bit of buying pressure in the dollar, a little shake and bake action on the markets here. But either way, if the euro comes down here towards this 127 level, I want to see how price reacts around here with the buyers and the sellers, see if they come and buy the euro. If that back test, if we get down there and get an official back test and it holds, that will be good. However, if we make a higher base and we don't go down there and back test, we start trending back up, that'll be a little bit more bullish, as people are basically saying, okay, we want to put our bids in right here because we don't think it's going all the way down there. You guys get what I'm saying there. So like I said, the FXE, now that's a euro dollar chart, but taking a look at the FXE, if I put the studies on here, all right, you can see what we have going on. Right, we had that breakout on high volume. All right, but that pullback that we're getting right now since the past 2 weeks has been coming in on low volume, right? Which also goes with the thesis that I'm saying. I'm maybe looking for a little bit more pullback in that euro dollar chart that I showed you guys, And so far that continues to happen. It's happening on low volume. So as long as we don't see that volume pick up when it's going down, we can expect that maybe the euro maybe try to put some buyers around that area. We'll see. Just different scenarios that we're putting together so we can learn, so we can know how to maneuver through the markets, and like I said, be proactive and not reactive after the fact of things starting to move. We'll have our trades ready to go. All right, let's take a look at the volatility index, the VIX. Another key pattern that we've been watching is this nice little downward bullish channel. Obviously, you guys know these downward bullish channels usually result to the upside. All right, but of course, you want to wait for that breakout. All right, and another scenario this is a VIX daily chart, by the way. Another scenario that we were talking about was the fact that if the volatility index last week wasn't, the market was trading sideways to up and the volatility index wasn't breaking down here, that means people are actually putting their bids up here, holding this little bids down here, and we can get that nice little up move. We got that nice little up move, and we hit near the top of the channel. Didn't actually touch the top of the channel, but we hit right near it, and definitely showing that this 1331 level on the volatility index is acting as support. Now, one thing that I'll be looking for, all right, and sorry that I keep on zooming in and out, but one thing that I'll be looking for is that if we do get a pullback, if the market does go right back up and the volatility index does pull back, if this 1331 level breaks, all right, we could get a nice move towards the bot, and it breaks and we hold below it, then we could get a nice little fast move in the volatility index all the way down here towards the bottom of the channel, which has been a buy reference area. However, I'm not sure that's going to happen. We'll see, but I am using this 1331 as a key reference area to watch because we do have a nice little downward channel in play. So that is the volatility index. Let's go ahead and take a look at the commodity sectors now. Taking a look at crude oil. All right, start off with crude oil on a monthly time frame. Crude oil is getting interesting, guys. We have this nice little kind of pennant pattern that's forming right here. Definitely, crude oil, if it keeps on consolidating this year, definitely going to be looking for a big move in crude oil going into 2013, whether it be to the upside, all right, or whether it be a breakdown to the downside. All right, now, I could joke around and saying upside where maybe it's thinking about a war, or I could say downside where maybe thinking about, just the market economy not getting good, the data starting to come bad and people just starting to sell crude oil as they're not expecting the economy to grow. I mean, different scenarios. Either way, we'll be on top of it using our technical analysis and then obviously tracking some of the news in the market and the macro news that comes out. But definitely crude oil is up to something and looking for a move pretty soon. A big move that's going to continue with possibly the trend that's been coming off the 2009 lows, or in fact, making a lower high off the big sell-off that we had back here in 2008. All right, taking a look at the weekly time frame. Crude oil needs to get back above that 94 key level, which you guys will see on the daily chart as a reference level. We break back above 94, we can maybe go back up towards 100, depending on all the different scenarios with the commodity sector, the dollar, the euro, all that other good stuff. But all we could do right now is work off these key price levels that we've been watching. 94, remember, resistance, prior support. Now it's going to act as resistance on this side. All right, so we need to really get above 94 and hold if you're looking to be bullish on crude oil. If we continue to hold below 94 and drift lower, we can go back down towards the 87 level. All right, so that's crude oil. Let's take a look at the gold futures here. Gold futures broke above 1720. Actually, I remember about a couple weeks ago when I was looking for gold futures to go higher. My friend was like, "Oh, I bet you gold's not going to go above 1720 by the end of the week or something like that." This was like this week right here. It was like this, and then Friday we got that big breakout, and gold broke out. The next, I made a bet with my friend for like $15, and I just got the $15 in the mail yesterday. So shows you, to make sure you do your correct market analysis before you start to put in opinions on which way the market's going to go. You got to look at the charts and read what the charts are telling you. Any case, taking a look at the weekly chart. Weekly chart looking pretty good here. May need some consolidation in gold a little bit before it tries to get a break above 1800. But of course, any headline news could come out and gold could shoot up or sell down. So definitely want to watch this area. But right now, looking for maybe some more consolidation in gold before it tries to make a move to the upside. Even though it did have a nice day on Thursday. All right, then you have your monthly chart right here, which is looking pretty nice. I mean, this thing's trending pretty solid. You can see how it's trending. You got the 50, the 20, the 8. It recaptured the 8 EMA and closed. It recaptured the 8 EMA and closed above it last week. Got another consecutive close above it this week. So keep an eye on gold if it breaks above 1790. Well, here 1790, which was this week's trading week's highs here. All right, so I'm going to put an alert for myself just so I know at 1790, 1791. And that's gold. So gold's looking pretty decent. We can take a look at the GDX and even the GDX. Take off my studies here. Even the GDX is doing pretty well. All right, if you guys recall, we called the GDX for a long back down here. We had purchased those new mining calls, and it's been going up ever since. All right, and the reason we call that out, let me show you guys here, was because we had this nice little downward channel break play that was taking effect. This nice little downward channel that has we have been tracking. They finally got that breakout. So that's the GDX. Take a look at silver. I know some of you guys out there like to trade the silver. Put the studies back on the chart. And silver, basically right now just consolidating in a range between 32 and 34. Break above 34 and hold bullish. We come back towards 32, maybe a good buy area. We'll have to wait and see how things line up if that does happen. Okay, so I went over dollar, went over silver, went over gold, GDX crude oil, went over the different markets. Everything's looking pretty good. Some weak sectors are the semis. We take a look at the semiconductor sector, SOX. I mean, this one had a breakout above the 390 level on the semiconductor index. However, it has failed and is back below that 390 area. So really, unless we could break, okay, unless we could break back above 390 and hold, we could see the semiconductor index continue to trend lower here. And that means that a lot of people that brought the semiconductor index above 390 could be trapped. And we'll see. I mean, obviously we have been seeing some weakness in some of these stocks here. Intel, you can see this nice little downward channel that it is respecting here. Our key reference levels that we've been working off of, our inflection points that allow us to draw a little downward channel. And Intel could go down here towards the bottom of the channel. Still has not touched the bottom of the reference channel, but very well can if it breaks below 22.45. Look for this thing to go down here towards 21 or below 22, I should say. All right. Transports are weak. The railroad stocks have been getting hit. All right, ever since about 3 weeks ago when they started reporting UNP, KSU, NSC, and you can see that everything has been breaking down. What else here? Some strong stocks. Google still continues to go higher. All right, Google still continues to go higher, trending pretty nice. Take a look at Apple. Apple's pulled back a little bit this week, but got a nice bounce on Thursday. That showed you there were some buyers definitely looking down the support area, but then got rejected again on Friday. So Apple's getting a little interesting here, guys. Definitely something to watch if you're an intraday trader, as there's been nice moves in the stock intraday and a lot of action on the weekly call options. Me personally, I've been trading options, but I've been, dabbling a little bit more into the weekly options, and it's been working pretty well. And if you guys have been in the chat room, you guys know that it's been working pretty well. And now, I'm going to be watching Apple more, because if Apple breaks below the 660 level and holds and breaks these 50-day moving averages right here, this thing could get ugly. In the meantime, we're going to keep on watching it. We have a possible head and shoulders pattern that could be in play. Remember, we talked about how people got trapped last week, so they definitely sold their positions. They'll be stupid if they're still long. Excuse me, but it's just the truth. And and if Apple does not get back above 680, this stock could be in danger for a breakdown below 660, which will not be good. So, you Apple bulls out there, be very careful with the stock, and I'll be on top of that if we get a breakdown, or I'll be on top of it either way if we break back above 680 and try to make it back above 700. We'll see. But you can see we are closing below the 8 EMA, 8 SMA, 20 EMA, 20 SMA. And the only thing right now, as far as moving average for support in the short term, are the 50s down here around 650 and 655. IBM, a stock that I think is going to start picking up again since Google's already ran and since Apple's kind of dying out. I think money managers are going to start putting money to work in IBM. Definitely look for a break above IBM against a 208. Look, next target on IBM is 210. I will be doing some research on those weekly call options of those to see which ones are trading pretty well and pretty thick, active. And we should have a nice actionable trade in this stock sometime next week. Got that on watch right there. So that's about it, guys. Of course, if you guys want to see more of the stocks that we'll be watching that we're going to trade next week, make sure you join us in the chat room Sunday night at 9:30 p.m. and get prepared with us for the next week's trading. And again, if you want access to that chat room, go to mywallstreettv.com. Type in the password SMART, and you should have access to the chat room. If you have any problems, contact me at ccooper@wallstreettrading.com. If you are in the South Florida area and you're looking to find out more about trading with the firm or trading education, go to meetup.com and type in Wall Street Trading Network South Florida. You'll find us there. I'm the organizer. And so far, we had our first meeting, and everything's working out pretty well, guys. So make sure you get on board. We got a new movement coming into the trading field, guys, and that is wallstreettrading.com. Have a great weekend and enjoy the football games tomorrow. Cheers.